I just want to get a sense from you what you make of this incredible rally that's the biggest going back to late 2022.
What we've seen here, Lisa, I think is a lot of people mistrusting the Fed, jumping to conclusions on a lot of things, and then all of a sudden getting the gist of actually perhaps the Fed chair is talking the talk and walking the walk. And we think we've got a good situation here. Things are indeed getting better, even as some things remain poor or worsen in terms of just whether it's geopolitical stuff or questions as to the outcome of the election in November, or questions in the fact that, not every company is producing these great results in aggregate. We see the S&P 500 delivering so far for the second quarter.
John, you've said in the past that this is not a Federal Reserve that needs to cut rates. Do you still think that they're going to cut rates close to 100 basis points, albeit that's come off some of the more extreme prognostications that have been baked into the market? But do you think that that is necessary given the strength?
I think the strength is more resilience rather than of a robust nature, and there's a big difference in the meaning of those words. And I think that the Fed at this point is likely to do a down payment in September of 25 bips ahead of the elections, and I don't think it risks a questioning of its independence politically by doing that. I think it recognizes the fact that we are seeing a slowing in the growth of inflation very clearly towards their 2% target, but not yet there. But they're considering now, and the Fed chair, as you mentioned a little bit earlier, has really mentioned that it's not just about inflation, it's about considering the unemployment number, in effect, and that full employment goal. So I look for 25 bips now in September, and very possible 225 bips, one in November and one in December after the election.